So Ethereum ETFs have launched. I'm sure you've heard about it, and we haven't seen the expected pump. And I think I know why. Again, not financial advice, your own research, but I'm going to go through this article and then I'm going to offer you my 2 cents on why we haven't seen a pump yet. All right, so spot ETFs launch. Are Ethereum derivative traders positioned for upside? Guest post by Cointelegraph. Not the best place to look for news, but here we go. Right, ETH has been trading within the narrow 6% range between that amount and that amount for the past week. Notably, Ether last closed at the relevant part of the article. One can hardly blame the lack of momentum in cryptocurrencies given that Bitcoin BTC is trading merely 10% below its all-time high. Okay, and then this is the important part. Analysts are optimistic about the net inflows for the spot Ethereum ETFs. However, there were concerns about potential outflows from Grayscale Ethereum Trust, ETHE, which was converted from a trust fund that previously did not allow investors to cash out. Grayscale's decision to keep ETHE expense fees at 2.5%, which is much higher than competitors, also influences this movement. Okay, that's crucial. Wintermute wrote in a July 21 research report that it expects ETH spot ETFs to generate up to 4 billion inflows in the initial 12 months of trading. Others, like the ASXN Crypto Asset Manager, were more optimistic, anticipating 4 billion in net inflows in less than 5 months. The firm added that the launch of Grayscale's mini ETH ETF, which charges 0.15 in fees, will mitigate eventual outflows. Regardless of the initial demand for the aggregate spot ETF, cryptocurrency investors are somewhat concerned after the Mt. Gox exchange estate moved 47,500 Bitcoin worth 3.2 billion on July 23. The bankruptcy process plan announced on July 5 established plans to carry out payments to creditors. The uncertainty stems from not knowing how much of the 140,000 BTC held by Mt. Gox addresses will be sold in the market. In essence, either bulls are hesitant to add positions ahead of the aggregate spot ETF net flow data, at least for the initial days, and due to the fear of potential market sell-offs driven by Bitcoin that has been locked for over a decade. These concerns explain why Ether's price has been unable to break above 3,600 in the past 5 weeks, but does not justify investors' lack of optimism according to the ETH derivatives. And then it goes to give us some derivative data. Now, I personally think that, first of all, it's still too early. This launch was quite unremarkable. Like, I didn't even notice that it happened. There was no built-up anticipation per se, because they had already been approved and then just things went silent for a while. I think that the gap between the approval and the launching of the first one either took too long and a lot of people had lost enthusiasm. Also, it was launched without much fanfare, which is why I think that it didn't drum up enough sort of FOMO for it to show anything. Like, I didn't even realize what's happening today, and if I didn't realize, a lot of people probably didn't either. Now, having said that, the FOMO crowd have already FOMO'd in, I think, so that FOMO price has already been built in. If you remember, when the approval happened, we did witness a good bump in the ETH price, so I think a lot of people are probably locked in at that FOMO price, which then came down because of, you know, general downturn corrections in the market. So I think a lot of retail are already locked in at a higher price. So while some of them are still getting now, maybe they have some extra dry powder, I think retail is exhausted. The people who are really going to move the market are the institutions who are going to get in when their trading starts. They're not going to FOMO in randomly today. They're going to wait till it's time to buy. And then I think that's going to take maybe a couple of days, maybe a week, who knows. But when they start, the likes of, you know, Goldman Sachs, BlackRock, you know, whoever else is buying. And there's this fear, of course, that Grayscale might do exactly the same thing they did with the Bitcoin, which was to sell their trust. And that might create a negative effect on the market. So people might actually maybe be waiting for Grayscale to exhaust their stash, because they do have quite a fair bit before going in. Who knows? There's a lot of uncertainty. But That's my 2 cents, no financial advice. Do your own research. Peace.